Hello viewers. Now that the dust has settled on elections with the return of Modi regime, the markets are back in celebration mode. A leading indicator of this mood is the number of companies that have lined up to go public. About rupees 300 billion is likely to be raised in the IPO rush over next 2 months. Bajaj Housing Finance, Haldiram, Ola Electric, Prestige Estates, Swiggy, Vari Energy, Vikram Solar are some of the potential IPOs causing much buzz. Most of these might list at decent premiums. Some of these may genuinely have a great growth potential. However, I doubt there would be enough margin of safety in valuations. As Warren Buffett says, it's almost a mathematical impossibility to imagine that out of thousands of things for sale on a given day, the most attractively priced is the one being sold by a knowledgeable seller, that is a company insider, to a less knowledgeable buyer, that is investors. Well, that's IPO for you. With little public history behind these companies and almost no experience or track record of promoters' attitude towards minority shareholders and their capital allocation acumen, it is indeed tricky to arrive at a fair value for companies going public. I would rather wait for some time to have conviction on these businesses before rushing to recommend them at the time of IPO. As for the companies raising funds, there is another kind of offer that I am finding interesting to track. I am speaking of QIP or Qualified Institutional Placement. Unlike an IPO, the people who participate in this offer are not general public. The only parties eligible to purchase is a select group of persons called Qualified Institutional Buyers or QIBs. These are accredited institutional investors as defined by market regulator. These investors are a lot more experienced and sophisticated than retail investors. Keeping a track of the activity on this front could be a starting point to discover some gems in the market. But before we move to that, let us understand what QIP is. QIP or Qualified Institutional Placement is a fundraising mechanism for already listed companies. Herein, a company which is already listed on exchanges raises capital from the domestic markets by issuing equity shares or securities such as debentures that could be converted into equity. QIPs were allowed and introduced by regulators so that Indian companies do not have to depend too much on foreign money through global depository receipts or American depository receipts when they needed money to run and grow the business. So why would a company choose to go via QIP instead of, let's say, raising money through an FPO or follow-on public offer or debt? Well, QIP is a quick way to raise capital when a company needs external funds for growth and running the business. In comparison, other modes of raising capital such as FPO could be time-consuming, costly, and require a lot of procedures and guidelines to be followed. The other option, raising debt, comes with its own issues like higher leverage and increased burden of interest expenses. QIP could be a win-win for both companies and institutional investors. The institutional investors choose this route to invest as they are likely to get a meaningful stake in the business at a discount under QIP, an option which may not be available in case of buying from open markets. The maximum discount that the regulator allows is 5% on the floor price of the issue. The floor price itself is decided as per a pricing formula that takes into consideration average weekly highs and lows in the preceding weeks. Now, QIBs do not guarantee a gain. But as the investors are experienced and sophisticated, a good demand for QIP suggests that they see value in the business at the QIP issue price. One can assess this demand from the discount or premium offered on QIP from the issue price. If the discount is huge, it suggests a relatively weak demand for the issue. If the QIP offer price is at a premium to the floor price, it suggests high conviction of institutional buyers in the business and the management. Now, there are quite a few companies that have raised money through QIPs in the recent months and years. Now, here are some names where the current stock price is lower or at par with the price paid by QIBs and where fundamentals offer some comfort. The first is Bajaj Finance, an NBFC which is high on tech integration in the business. In FY24, two of the company's products came under regulatory restrictions on account of deficiencies on Key Fact Statement or KFS for products related to sanction of loans and disbursals under eCom and Insta EMI card. Do note that these restrictions have now been removed in the month of May 2024 post-addressal of issues highlighted by the RBI, and suggests management's agility and ability to course correct. The issue price of its QIP in November 2023 was fixed at Rs 7270 per share, that is 7270, which was 3.5% discount to the floor price of Rs 7534 per share. The stock is trading at Rs 7285 as I record this. Bajaj Finance is currently in the news for Bajaj Housing Finance IPO. The second is PSP Projects, a company in construction space. The company is associated with Surat Diamond Bourse project, Kashi Vishwanath Dham, Gift City, etc. With the completion of Surat Diamond Bourse project, it is now qualified to bid for high-value construction projects where the competitive intensity is less. PSP Projects raised a QIP in April this year at an issue price of Rs 670 per share against a floor price of Rs 683 this year. The stock is currently trading at Rs 662. The next is Exascales Technologies. Exascales Technologies is another QIP that you should keep a track of. The company is a defense capex beneficiary. It was recently in news for delivery of advanced counter-drone systems under Rs 1 billion order from the Indian Army. The management estimates addressable opportunity in the drones to be at Rs 30 billion over 5 years in addition to the production revenues. The company's revenue in FY24 was 10 billion. The floor price for Exascales Technologies was at Rs 697. The issue price for its QIP in Jan 2024 was at a discount at Rs 662 and the stock is currently trading at Rs 602. Happiest Minds is an IT company that created generative AI business unit. The management expects revenue growth of 35% to 40% for FY25 with margin range of 22% to 24%. Over next 7 years, it is targeting a revenue mark of $1 billion or Rs 83 billion, which is almost 5 times the revenue in FY24. Happiest Minds raised funds under a QIP at an offer price of Rs 924 last year. The stock is currently trading at Rs 900 per share. The next is Laxmi Organics, a leading maker of acetic acid derivatives used in specialty and essential chemicals. Laxmi Organics is also getting into fluorochemical specialty products. The company is likely to incur capex of Rs 11 billion over FY24 to FY26, for which the QIP has been raised in October last year. The issue price was Rs 267 per share. The floor price was Rs 283 and the stock is currently trading at Rs 254. The last stock in this discussion is an SME stock, Phantom Digital, a company that is associated with visual effects in Bahubali and RRR. It raised QIP in December 2023 at an offer price of Rs 413. The floor price was Rs 434 and the stock is currently trading at Rs 386. Check the link below the video to get an update on more such stocks where the stock is trading at a discount to the price paid by QIBs. Do note that no view is implied on these stocks through this video. If you indeed find a stock that looks good on fundamentals, there is a chance that you could enter these stocks at a price lower than what these sophisticated investors have paid. Now keep in mind that QIP will lead to increased base of equity shares and to that extent could lead to earnings dilution. Tracking QIPs can be a good starting point to select stocks, especially in a scenario as and when markets fall. However, the idea is not to blindly copy these trades. With this, I have come to the end of this video. Hope you find it useful. Let me know your views in the comments section. And for more such content, subscribe to Equitymaster YouTube channel. Thank you for watching. Goodbye.